Welcome to FX Tech's comprehensive EUR/USD analysis for October 6th to 11th, 2025. In this report, we'll examine the euro-dollar pair's performance during a critical week marked by significant economic data releases and central bank communications. Our analysis draws from leading financial sources including TradingView, investingLive, ActionForex, and DailyForex. We'll explore key technical levels, market sentiment, and provide actionable trading strategies for both short-term and medium-term perspectives. Let's dive into the market dynamics that shaped the euro to US dollar movement this week. Our analysis synthesizes data from 4 premier forex market sources. TradingView provides comprehensive technical charting and real-time price data. investingLive offers expert technical analysis and market commentary. ActionForex delivers daily technical outlooks and key levels. DailyForex contributes detailed forecasts and trading signals. As of October 11th, 2025, EUR USD trades at approximately 1.0950, reflecting a significant decline from the week's opening levels. The pair experienced notable volatility throughout the period, with key economic data and central bank communications driving price action across multiple timeframes. EUR USD experienced significant bearish pressure during the October 6th to 11th period, declining approximately 1.8% from its opening levels near 1.1150. The pair broke below several key support levels, including the psychologically important 1.1000 level. Daily candlestick patterns showed consistent selling pressure with multiple bearish engulfing patterns. The RSI indicator moved into oversold territory below 30, while MACD crossed bearishly. Trading volume increased significantly during the decline, confirming strong bearish momentum. The 50-day moving average was breached, signaling potential for further downside movement in the near term. Market analysts across platforms share a cautiously bearish outlook for EUR/USD. TradingView's technical analysts highlight the break below key support levels as a significant bearish signal. investingLive emphasizes the importance of the 1.0900 support zone and notes increased selling pressure. ActionForex points to the failure to hold above 1.1000 as a critical technical development. DailyForex analysts suggest the pair could test lower support levels near 1.0850. The consensus view is that EUR/USD faces continued downside pressure unless it can reclaim the 1.1000 level with strong momentum and volume. Several critical events shaped EUR/USD's movement this week. The US dollar strengthened significantly following stronger than expected non-farm payroll data, which showed robust job growth and wage increases. Federal Reserve officials made hawkish comments about maintaining higher interest rates for longer. Meanwhile, Eurozone economic data disappointed, with German industrial production falling and retail sales missing expectations. The European Central Bank's dovish tone in recent communications further pressured the euro. Geopolitical concerns and risk-off sentiment also supported the US dollar as a safe haven currency during this period. Key resistance levels for EUR/USD are located at 1.1000, psychological level and previous support, 1.1050, daily pivot, and 1.1150, week's opening level. On the downside, critical support levels include 1.0900, current support zone, 1.0850, next major support, and 1.0800, key psychological level. The 50-day moving average at 1.0950 now acts as resistance. The 200-day moving average at 1.0850 represents a crucial support level. A break below 1.0900 could accelerate selling pressure, while a recovery above 1.1000 would be needed to shift the near-term outlook back to neutral or bullish. For short-term traders, the current setup suggests a bearish bias with careful risk management. A conservative approach is to wait for a bounce to resistance levels around 1.0950 to 1.1000 before entering short positions, with targets at 1.0900 and 1.0850. Stop-loss orders should be placed above 1.1050. Alternatively, aggressive traders could sell on further weakness below 1.0900, targeting 1.0850 and 1.0800. For counter-trend traders, a potential long opportunity exists if price reaches extreme oversold conditions near 1.0850, targeting a bounce to 1.0950 with stops below 1.0800. The medium-term outlook for EUR/USD remains bearish, following the break of key support levels. The primary scenario, 60% probability, suggests continued downside pressure toward 1.0800 to 1.0850, driven by strong US economic data and Fed hawkishness. The secondary scenario, 40% probability, involves a recovery if Eurozone data improves or if the Fed signals a pause in its hawkish stance, potentially targeting 1.1150 to 1.1250. Key factors to monitor include upcoming US inflation data, ECB policy decisions, and global risk sentiment. The technical structure favors bears unless significant fundamental changes occur. Key risks to our bearish outlook include potential Fed dovish surprises, unexpected Eurozone economic strength, or significant geopolitical developments that weaken the dollar. Upside risks, 30% probability, include ECB hawkish pivot or strong Eurozone data. Downside risks, 70% probability, include continued Fed hawkishness, weak Eurozone data, or global risk-off sentiment. Traders should monitor US inflation data, Fed speeches, and ECB communications closely. Proper risk management is essential, with position sizing appropriate to account volatility. Use stop-loss orders consistently and avoid over-leveraging in this volatile market environment.